Alright, welcome back. I'll be going over some trades I've been taking in the past couple of days. Um, so this is basically an end of week review. Had a pretty bad week this week. So after the last video, here I took one, two, three, four more trades. One on a Wednesday, one the same day, Wednesday, and two trades on Thursday. So after the 80 USD loss, we took another loss of 113 US, 70%, putting our account at 47. Small win at 25 US, 54% increase at 73. We lost 33, 45% loss. Now we're at 39. And then we made 80 USD, 201% increase, which puts the account balance now at 116. It's a very, very unstable, fluctuating account right now, but that's because I got pretty emotional. Like a lot of that got into play. So, and I have learnt new things like stop adding size. That's a bad habit I picked up when I got all these big wins. I started adding size on top of my initial risk, and then when I'd lose, I'd get in again and again, and that's just contradicting what I've been preaching in my previous videos. So I will take accountability and say that I've gone against my rules quite a bit, but that's why we're doing this. I'm just grateful that I'm acknowledging these psychological battles and stuff, and if I keep working on it, then I'll overcome it eventually. But yeah. So Euro USD. Let's have a look. Yeah. So yes, you add a size. Pretty bad. Went against my rules, but because a market shock shift didn't really happen after this 4 hour got tapped into, but I took this move as enough bullish movement. So when it retraced, when it created a 15-minute IRL, I just went off that, no market shift, and then you just blew through my stop loss. So yeah, this is bad trade. USD CAD. What the hell? Okay. A small win. This one was pretty good. Because we had liquidity built up here. I was actually really patient on this one. But my initial POI would have been the best entry like ever, but it was like at 2 a.m. I was asleep at the time. But yeah, I saw that we had liquidity here. Some good bullish 1 hour price action mitigated this volume imbalance. Sort of demand area went off, retraced into this IL, went off, and then there was a small internal range liquidity there, but I had marked out the 15-minute. But I really like this one because there was some nice liquidity building up there. So, but we chased this one a bit. To be honest, I don't normally do that, but like that price action is beautiful. Like I'd drawn this out, and then then the next day I saw this, I was like, oh my gosh, like this that would have been the best. But I chased it a bit, and I believe I went off this 15-minute break, sort of. No, it's not a breaker, but 15-minute IRL there. It sort of consolidated when it mitigated it, but I entered when I got my confirmation, which was 2 5-minute candles. Where are we? So yeah, 2 5 minutes, whatever, and then TP. So that's the one we made like 20 something USD. And then next up is USJ. This one was bad. Daily order block. Actually, no, it wasn't. It wasn't so bad. Like, it was still my trading strat. But I didn't really get the initial market structure shift because at daily order block, it reacted really well. So I was like, okay, I'll still use this even though it's not like a market structure shift. I'll still use it. But because like it's a lot of bullish movement. So I highlighted the lowest 15-minute RLs. It's mitigated it. I would say it basically closed below, but at the time I was thinking it was just tapping into these small demand areas here. So I still went off it. Got my 2 5-minute candle closes and then hit stop loss. And we have gold, which is the trade I took on Thursday, I think. Yeah, so daily internal range liquidity there. Right to here, marked out. It's already mitigated, but it got re-mitigated. So if we look on it on the 15-minute, touched it, swept that low, touched it again, closed above, good reaction, and then around 4 p.m. is when I normally start looking at the charts because when I get home from work and stuff and stuff like that. So I had marked out these two, but the alarms went off, but I didn't see the alarms on my phone, so it went off. And I draw out this 4-hour internal range liquidity, but I didn't really wait for a market structure shift again, but I just had a really good hunch. Like I really like the price action, and I saw that on the daily. There was previous lows, so like a previous high, sorry, like here and here. So I was like, oh, okay, there's a good chance that they will be taken. Those highs will be taken. So didn't really wait for a market structure shift and the retracement. I just really liked the price action because once we closed this candle, I was like, wow, it's an engulfing candle. It's like, it's so much buying pressure. Like, it was enough for me at the time. So it wasn't really my strat again, but yeah. So I will be doing better. I always will be trying to do better. And that one is the one that made us 80 USD. And yeah, I learned that if I go with the current 15-minute and current 1-hour structure, it's going to be a higher probability trade compared to if I were to go against it. For example, gold structure, zoom out, bullish, 1-hour structure, bullish, and you buy, vice versa. Bearish structure, you sell. So I'll be trying to take that into more of a consideration when I plan my trades, because you could just see here that it works better. Went with win, against loss, with win, against loss, against loss, against loss, with loss, which can happen. Nothing's perfect. With win, you get the idea. But yeah, that's the end of the week review. We started with 318, pretty sure. Yep, we started with 318. Now we are at 116, which is fine. So yeah.